earnings season as well. Pidilite has declared its numbers. The management is now with us, Mr. Bharat Puri, Managing Director at Pidilite Industries. Sir, thank you so much. Congratulations on a great set of numbers. Can you just talk to us about the construction activities that have started and the recovery in the real estate? What does this mean for demand, consumer trend, and sustainable growth going ahead?
Starting with demand conditions, clearly, if you look at this quarter, and you would appreciate that this quarter we were cycling fairly substantial volume growths last year. Last year in this quarter, we grew volumes over 30%. Over that, again, we have grown volumes double digit. So clearly, demand conditions have been good. I think this third wave now, especially at the end of December, January, is impacting demand to a limited level. And we do believe that in this first quarter, until we are hopefully over this third wave, and it will be a short third wave, there will be some impact on demand. But at an overall level, if you look at construction, if you look at renovation, it's clear that post the pandemic, consumers are spending money on renovating and, upgrading their homes. And therefore, we are clearly benefiting from that.
Many FMCG companies have highlighted that they are seeing a moderation in rural growth from September. Is that the case with your industry? Can you give us a sense of rural versus urban growth?
See, while our rural business is still growing double digits, yes, I would like to signal we are seeing some signs of a slowdown. And I think the biggest single reason for that, frankly, is inflation. If you look at the costs of construction materials, be it steel, be it cement, be it any of the other input costs, clearly costs have gone up substantially, and that is biting the consumer. And therefore, from a money in the consumer's hands, clearly she is a little more handicapped than she was last year. While we still have a lot of scope in rural and semi-urban India, I do think that we will see some challenges in the next 3 to 6 months until the situation improves.
Well, Mr. Puri, as you mentioned, the inflation is cutting into the purchasing power of rural India, but it's also cutting into your margins as well. And that's a trend we have seen across the sector, with the gross margins being contracted on account of raw material pressure. Are you seeing the bottom of the pressure as far as the raw material prices are concerned, and is it expected to recover going forward?
See, clearly, there is no doubt about the fact that we are facing unprecedented inflation, which hasn't ever been seen before. I mean, if you look at our principal raw material, which is VAM, vinyl acetate monomer, last year, this quarter, the average price was close to $1,000 a ton. In December, we were paying $2,500 a ton. So, it's not about 10, 20%, it's more than double. Now, this kind of inflation is unprecedented. We've obviously taken calibrated pricing. In our belief, the fourth quarter of this year will probably be, in many ways, the bottoming out of the gross margins or the peaking of input prices. We are beginning to see some softening in VAM prices. For example, VAM prices, which in December were $2,500, have come down to $2,000. But I think it's early to say. We've got our fingers crossed, but there's so much geopolitical tension and so many things happening, be it Russia and Ukraine, be it therefore the price of oil. I think in these times, you have to really look while you're leaping, and you will have to do this on a month-by-month basis.
Sure, Mr. Puri, you talked about calibrated price hikes. To what extent have you been able to pass on these price hikes to the consumer? And is there more in the pipeline?
See, as far as pricing is concerned, we have been very conservative on pricing. We've always said that we will price only at 70% of inflation, because we don't believe that the input prices situation is a long-term trend. It will even out. And we are fairly hopeful that over the next 3 to 6 months, we will see some evening out of this. In the meantime, we have strengthened our business structurally from a cost point of view. We're at the lower end of our margin range, as we had indicated. But as of now, we don't see the need for further pricing, presuming this input pricing situation remains where it is. But, having seen this over the last 6 months, I would just keep my fingers crossed and say, let's watch it every month.
So how would you continue to gain market share versus unorganized players? If you give us the figures that market share has gained over, say, in FY22?
See, there is no doubt about the fact that given our growth rates are, on a YTD basis, we are growing at close to 40%. Obviously, the market is not growing at these levels. Even if you look at the CAGR over 2 years, we're growing over 20%. So clearly, we are gaining market share. Very difficult to put numbers to it, but clearly, as you know, the largest brand in the adhesives business, the largest brand in the waterproofing business, clearly we are seeing good momentum and we are seeing some amount of market share gain. Very difficult to put a figure to it.
Okay, Mr. Puri, but in terms of the volume growth for the rest of the year, what should we expect and which categories are driving the growth?
See, at an overall level, we've always said that we expect volume growth in our core categories to be 1 to 2 times GDP. So things like, for example, the adhesives business, Fevikwik, we expect at 1 to 2 times GDP. The growth businesses such as waterproofing, various other, the rural markets, semi-urban markets, growth geographies, we expect at 2 to 5 times GDP. So as long as economic growth happens, we believe we should be anywhere between 1 to 2 times GDP as an organization. Now, in the short run, in the next 3 months, given the pandemic, some of the closures we are seeing, you may have minor hiccups. But if you look at the medium-term outlook for the whole home improvement sector, India has a massive housing shortage. There is a large amount of home renovation and upgradation taking place because people are now spending a lot more time at home. So all the trends are positive for an organization like us, and therefore we are fairly optimistic as far as the medium term is concerned. We're strong believers in the India story, and I think a lot of it still has to pan out.